Management information systems and accounting. What was the purpose of the toy manufacturer example? Well, its main purpose was to show that running a firm produces large quantities of information. These pieces of information are organized into various management information systems, abbreviated MIS. They are elaborate databases. One of them monitors the money that we own or that we will own, that is, that we have in the present and that we will have in the future. General accounting is an MIS. Productivity measurements are recorded into another MIS. The management of the workforce is done via MIS. Managing clients, suppliers, partners like banks, the authorities are also managed in MIS. And so is the competition. The accounting system, as I just said, is only one of the MIS to assist the management team. In the previous example, the logbook filled with 18 steps contained monetary as well as non-monetary pieces of information. Let's look at what that is. Monetary information. For instance, the purchase of a van for 4,000 euros paid by check is a monetary piece of information. The sale of 2,000 toys in exchange for a 20,000 euros IOU from the client is also a piece of information of a monetary nature. Yet, in the second case, no money was exchanged. Notice, however, that in each case, it is an exchange of value between the firm and the rest of the world, something that I will often represent like this. Here is the firm, here is the rest of the world, and such an exchange is something like this. Value comes into the firm, and value, with the same measurement, leaves the firm. Example of a non-monetary piece of information. For instance, the measurement of wood waste, or the productivity of the employees, or a description of the work contracts. All these things are important information that the management team must be aware of, but they are recorded and managed using other MIS. Let's look now at an important and formal concept in accounting, the journal. The journal, it is a part of the logbook concerned with monetary information. The logbook is an informal term that I'm using in this course, but it's not an official one in accounting, whereas the journal is an official term and concept in accounting. So it is the daily recording of the transactions between the firm, F, and the rest of the world that I abbreviate by ROW, and that I will often represent like this. That is the representation of a transaction, that is an exchange of value, for values, if you prefer, between the firm and the rest of the world, and both have the same monetary measurement. So to finish this lesson, what is accounting? Well, accounting is a set of techniques to record, organize, and present in a useful manner monetary information about the activity of the firm. This information, properly organized and properly presented in a synthetic way, is very useful to managers.